but I bet you get this question. I do, certainly, from people who may not be as sophisticated in investing. And they simply say, I don't get it. The economy is suffering. The country seems to be suffering. But what's going on with the stock market?
Well, it's the $50 billion question, David, because there's an obvious disconnect between market levels and the real economy. And if you look at the real economy, and I'll come back to the market in a second, it's going to be about 2 years before just total GDP returns to the pre-virus levels. It's going to be longer than that before the unemployment rate returns to the 3.5% we had before the virus struck. And 13 million Americans right at this moment who had a job in February don't have a job today. So the real economy is struggling. And there was commentary on CNBC earlier this morning about airlines operating at about 25 to 30% of pre-virus levels. There are zillions of examples like that. In terms of the market, obviously the record levels of monetary expansion between the Fed balance sheet expansion, more than $3 trillion, and the fiscal expansion, about $3 trillion also, that is driving the market upward, as it did in 2008 and 2009. And the market is looking ahead to, it seems to me, the second half of 2021, when we will be a lot stronger. And then there's the reality that, as Jason Furman puts it, if 10 small consumer-facing businesses close and all the revenue goes to Walmart, the stock market goes up and the real economy goes down. Right. So there are all kinds of reasons for this disconnect, but there's no doubt that there is one.
Yeah, well said. Let's get back specifically to, Washington. I mean, it's been a long time since you've been there. Things have changed a lot since the early 90s when you served as a deputy secretary of the U.S. Treasury. But give me your take here in terms of whether you think we will get to some sort of legislation, not executive order, but legislation that deals with the current crisis again.
Well, I hope so, and I have my fingers crossed and think so. The executive orders don't do very much. Whether you look at the absence of any assistance for state and local governments, whether you look at the very, very temporary nature of the proposed expansion of or continuation of unemployment insurance, the federal addition to it, or any other aspect of the executive orders, they are a poor substitute, a very poor substitute for a robust piece of legislation. However, they may help bring about that fourth and final economic rescue bill, simply because they do put pressure on negotiators, I think, to resolve their differences and agree. Now, I don't know that there'll be agreement. We've seen a pretty big gulf between the Speaker, for example, and Leader Schumer on the one hand, and Meadows and Mnuchin negotiating on behalf of the president. I don't know that there'll be agreement, but there should be, because we need this bill. We need a longer-term extension of the federal addition to unemployment. We need serious assistance to state and local governments. By the way, if we don't have that, they have no choice under state laws, which require balanced budgets, to implement severe budget cuts. That's economically contractionary. That's the last thing you need from an overall national fiscal policy point of view. We need funding to enable schools to reopen and deal with all the COVID effects. And we need more assistance in terms of COVID itself, tracing, testing, and so forth. So the executive orders are puny. That's not a criticism. That's just that you can't do much under executive orders in a situation like this. And I'm hoping that we'll see the negotiating differences close and an agreement, because we need it.